Hello, everybody, and a very warm welcome to today's webinar brought to you by Shared Services Link and sponsored by Avalara. Today, we're going to be looking at the impact of e-invoicing and real-time tax reporting. My name is Sarah Fain, and I am the head of content at Shared Services Link, and I'm delighted to be joined today by Alex Bolf, the Senior Director of Global Indirect Tax and e-invoicing at Avalara. You, of course, have a very important role to play in today's webinar as well, and that is just to make sure that you get the most out of your time here. We may not be able to see you in the room, but we can feel you when you participate, you ask questions, you answer the poll questions. So please try to get the most out of this hour. And one of the best ways you can do that is to ask us your questions. You can send us your question, usually over on the right-hand side of your screen. You'll see a question box. If you type those into us, we'll be taking those questions in the last 10 minutes of the webinar. The webinar will be recorded, so you can listen again, share with your peers. Everybody on the line will get the slides for today as well. And if you like what you hear today, please get in touch. We'd love to hear from you and share the word on LinkedIn as well. So before we dive into the survey findings that we're going to go through today about a bit of a pulse check on e-invoicing and real-time reporting. Alex, I'd just love to bring you in here. If you could give us a bit more context about just what we mean by the e-invoicing and real-time reporting requirements, what people have had to prepare for, and what are they going to have to start preparing for in the next 5 years as well.
Thanks, Sarah, and hello, everyone. Thanks for joining this webinar. Yeah, so just to kind of set the scene, I thought it'd be useful to kind of look at this timeline. So very indicative, we don't have every single country here and all the detail, but if you look in the left-hand corner, if you look at the last decade, e-invoicing was predominantly in Latin America. Started off in Brazil, Chile, soon spread across the continents. And where we saw e-invoicing in Europe, it tended to be more public procurement. So very much focused B2G, invoicing a government entity, maybe a very particular contract that a business had. And what we saw in terms of reporting, tax reporting to a tax authority tended to be more standalone parallel reporting processes. So not linked with the invoice, maybe more aggregated summary data. But then if you fast forward to now, and we're starting to see everything change. E-invoicing is no longer just for public procurement. It's not just a LATAM phenomenon. It is now mainstream. We've seen it spread from Italy, a general mandate from 2019. This year, we've seen e-invoicing mandates in Serbia. We've seen a lot of platforms and pilots be launched. And 2024 is the game-changing year. France, Poland, probably Spain, Belgium, Romania, all have plans to implement mandatory B2B e-invoicing, which is really going to change how businesses interact with their trading partners. How you share an invoice, how you get paid, how you receive an invoice from your vendors, from your suppliers. And I think we're going to see this theme throughout this webinar when we start getting into the detail of our survey results. Historically, this was a local issue, country by country, year by year, something that was on the table of a local finance manager, maybe a local subsidiary. But with the wave of mandates coming up, confirmed or proposed, this is now a global issue, something that needs to be looked at strategically, and that's going to have an impact of how businesses go around solving this problem. They're looking more for a single solution, a single provider, or at least looking at this strategically, getting the buy-in from the C-suite. And then finally, there's a date on the screen, 2028. So this is VIDA, the European Commission's draft proposal for reform in relation to e-invoicing and digital reporting. This is certainly not the starting gun. That is the finishing line. That is the idea that there'll be mandatory e-invoicing with live reporting from 2028. In the last few days, there's been between 200 and 300 different amendments by the European Parliament. So it's possible that date will now be pushed back, possibly 2030. But for me, that is just on the cross-border angle, and really, it's the years leading up to that date that are important, because we will just continue to see more and more countries, particularly across the EU, implement mandatory domestic e-invoicing. And Germany has already announced that from January 2025, it will have a mandate. There are, half a dozen EU member states who have draft plans at various different stages. And really, I think it will only be a handful of countries, even across the globe, that don't have mandatory invoicing, by the end of this decade. So we're going to see that accelerate, and almost every day there's a new mandate that gets announced.
Thanks so much, Alex. So what we're going to do now is we took a survey of our audience, which is mostly finance, shared services, and indirect tax professionals, to better understand about how they are responding to some of these new mandates and regulations coming into force. Just briefly, so you can understand who took the survey, we had 100 respondents, mostly from Europe and North America. And again, these are largely finance professionals, indirect tax, and a few other. They would maybe fall into either procurement, general shared services, management, fulfillment, or maybe someone who just didn't neatly fit into the finance or tax category. And to give you a sense of scale of the organizations as well, I think it's particularly important when it comes into the international mandates coming into place. We wanted to understand about how many countries these companies operate in. So you can see on the chart here, just 30% operated in 1 to 2 countries, and the rest operated in more than that. So 18% in 3 to 10 countries, 11% in 11 to 20 countries, and 41% operated in more than 20 countries. So the majority here are operating in 3 or more countries. So Alex, it'd be good to understand from you as well about, at what point does a larger global footprint start to make these are quite a serious concern for companies?
Yeah. So I think if you only operate in a single country, 2, maybe 3, maybe that's sustainable. Maybe you can still take an approach where e-invoicing is a local tactical decision, delegated maybe even to a third party for some of the reporting requirements. Maybe the choice is a local procurement decision. But I think the moment you have more than 3 countries, you start to look at this strategically and holistically. It's a big investment in terms of technology, vendor relationships. You start looking at the overall economies of scale across multiple countries. But also for multinationals, most of these multinationals will have the same ERP system. You wouldn't select a different ERP for every country. And we're starting to see, particularly through shared service centers of excellence, as well as just through kind of broader finance transformation, a lot of businesses are aligning their processes country by country. So, if you start having a common data set, a common ERP, standard processes and policies across the multinational organization, I think that really aligns itself with looking at e-invoicing strategically, starting to say, actually, this is an issue, this is global, this is something that we need to look at and find a solution for.
Thank you. So we wanted to better understand kind of where these issues are on the priority list. But before we launch to our survey respondents, we want to hear from you. So coming up on your screen now is our first poll question of today. And we want to understand, what priority do e-invoicing mandates and real-time tax reporting requirements have at your organization? Would you say that they are a top priority and you have buy-in and support of the C-suite? Would you say that they are a high priority with senior level support? Would you say they're a medium priority with a limited degree of support? Or would you say it's low on the list of corporate priorities? I am seeing possibly a bit of a glitch in terms of the poll, so please do tick the option that best matches your situation. I'm not sure I'll be able to share the results right now, but I'll be closing the poll in 3, 2, 1. And I will see if I think they may not coming up on everybody's screen. So let me come back to you on that. But let me share the results from the survey. Apologies if you weren't able to vote in that poll. But when it came to our respondents, we see almost, at first you see a bit of a classic bell shape here, with 19% saying it's a top priority, 44% saying it was a high priority, 23% saying it was a medium priority, and 14% so it was low on the list. So I guess there's two ways of looking at it, perhaps like a bell shape, but another way of looking at it is taking those top two and seeing that that is 63% of companies report that having e-invoicing mandates and real-time reporting requirements is a high priority at their organization. So Alex, does this align with what you see in the market?
Yeah, no, it does broadly, Sarah. I think we're seeing, this is just going up and up the list of priorities. Every year, every month, the kind of business case gets stronger. I suppose I'm a little surprised that only 19% see this as a top priority with buy-in and support of C-suite, just because this is such a business critical process. It's not just tax. Maybe historically a lot of these so-called e-invoicing requirements were just tax. It was a parallel process, reporting of data, a subset of an invoice to a tax authority. But what we're seeing now is the mandates that are coming in, they really impact how an invoice is issued and received. So if you're not compliant, you can no longer do business in that country. You can't exchange invoices, you can't get paid, with some quite hefty penalties as well. So I would hope that even if this isn't a major priority, because there may be some other big projects in the business, that C-suite are at least made aware. They're in copy, they're being updated, just because this is so critical. If something goes wrong, it's not delivered in time, it really has an impact on business as usual.
Thanks. And I think you hinted at some of the concerns here that we're going to talk about on the next slide, that we also asked our survey respondents about what are their concerns about failing to be compliant with these new requirements on time. So there's quite a lot here on the right, so I'll talk through the top concerns down to the bottom. 70% recognize that failing to be compliant will lead to fines for the business. 66 said they are worried about business disruption, being unable to send or receive invoices. 50% were worried about tax audits triggered. 42% were worried about having to spend more time fixing problems down the line. A tie here for the number 5 is at 41%, the inability to reclaim VAT, reputational damage, and legal trouble for the company. But only 9% were concerned about legal trouble for individuals, and only 5% said they actually think there's little to no risk to the business or individuals. So would you say this is maybe an accurate rating of concerns that should be on people's radar?
Yeah, I think it is. I mean, I would personally put business disruption above fines and penalties, but they're not mutually exclusive. So in reality, the majority here are all true, and they would all impact a business if they weren't ready, if they weren't compliant. So for me, it is the inability to just operate your business, raise an invoice, receive an invoice, get paid. But then again, this is really changing how a tax authority audits a business, how you interact with the tax authority. Moving away from periodic summary level data in a VAT GST return, moving away from periodic audits, maybe in person, to a position where every single invoice is shared in real time. And in a lot of these countries, the tax authority are embedding continuous transaction controls. They are validating the invoice, sometimes up to 200 individual checks on that data, and they're receiving a lot of different data points. So if those aren't correct, if they're not passing the various checks, schematic, logic, even rules around the identity of the business, the digital signature, the customer's VAT number, maybe that drives whether they receive the invoice or not. if any of that's missing, any of that's incorrect, there will be a rejection. The computer will say no. But at the same time, it will just impact so many different business processes, procurement, AP, even credit control. So for me, that is critically important. But also, if you're looking at business case and you're also trying to look at how you quantify the cost of not being compliant, absolutely, penalties are definitely part of that.
Yeah, I think a lot of really great points there, and especially when with tax authorities scrutinizing these, I think it really highlights the importance of bringing tax into the discussion about the tools that are used in finance and beyond early on. Which ties into our next point here is we wanted to better understand in the companies that we surveyed who is actually driving and owning e-invoicing initiatives in their organization. So who's actually making the decisions. So again, you can see quite a lot to take in on the chart on the right here, which I'll read through. And that the top one is 22% said that e-invoicing is seen as a strategic decision and lots of key stakeholders involved. And a further 35% said that yes, e-invoicing decisions are made with a few different stakeholders, and that is including tax. But then towards the bottom, you see these respondents where tax is possibly not at the table here. 8% said e-invoicing is made with a few stakeholders, but not including tax. 21% said it's mostly led by one department, such as finance, with little to no other stakeholder involvement, or at 15%, it is not even defined yet at this stage. So what do you find, Alex, working with companies? What's the impact of not having tax at the table when these decisions are made?
Yeah, so it's a really good question. So, we obviously, receiving a lot of RFPs from multinationals at the moment, in the hundreds, and it's interesting to kind of see who the key stakeholders are and who's had input into the procurement process. And unfortunately, I think a lot of the time this is seen as a technology issue and a technology project. For me, it's not. For me, it really is all about data. And it's the impact on business processes. The technology side is the easy bit, the product side. That's why you use a service provider. You use a specialist e-invoicing company. But in terms of defining the requirements, tax needs to be at the table because the e-invoice is still the tax invoice. It's driving everything from input tax recovery, your invoicing requirements. It's the data you are sharing with the tax authority. There's more visibility with the tax authority, with the data, not only that they receive in real time, all the checks I mentioned before, but they will keep that data. They can run advanced analytics. We're starting to see in LATAM the use of AI as well to really interrogate that data, and that then leads to audits, assessments, things like that. So for me, tax needs to take a really lead role. They need to be at the table. They need to be helped define the requirements, and they need to be involved all the way through. So when this is being implemented, they really need to define the test cases. Actually review invoices. Are they meeting the standards? There's a lot of tax implications that you may not think about. In terms of how long that data needs to be stored for. Where does that tax data need to be stored? Look, there's a lot of local obligations coming from tax legislation that maybe other departments aren't aware of. So I just say really get to that table as soon as possible. Still a lot of debate. Should tax be owning this? Should it be owned by IT, AR? Different functions. For me, it's cross-functional. Obviously you need a project team with the right stakeholders around the table. But tax really needs to take a really key and clear role.
Thank you, and I hope that starts encouraging some people on the line to either reach out to your finance or tax colleagues now and make sure that this is a cross-functional effort. So another thing I want to look into now is one thing we've talked a little bit about is the local versus global approach. So we asked our survey respondents, how are they actually tackling e-invoicing and real-time requirements globally, whether looking at it locally or globally. So 10% respondents saying that they have a global solution in place, And a further 26% said they do have a global solution in place, but there are some local solutions for complex countries or legacy mandates. Another 26 said they are planning to adopt a global solution in the future, but are currently local based. And 38% said they only have country specific solutions in place. So really only 10% said they have a truly global solution in place. Would you say that this is kind of reflective of what you see, and that the trend is actually going global now?
Yeah, I mean, I think, if you kind of overlaid this with that timeline that we started off with, I think you'd see a correlation because, the 38% saying we only have country-specific solutions, that just mirrored what was happening at the time. These requirements were popping up at different times in different countries. There wasn't really, much kind of scalability. People just saw it as a local compliance requirement to meet. Let's take a sticky plaster approach. Some of the digital reporting, maybe it was outsourced to a provider. For e-invoicing, let's get a local software provider. Lots of local providers emerged to meet what was a very local issue. And maybe it was cheap, it fitted with the local budget, it was based on a local relationship the local country manager or finance team had, and that was fine because given the number of mandates in place, it didn't reach that kind of critical level. But that's all changed. Over the last couple of years, with the amount of new mandates and proposed and confirmed, we're starting to see that shift. And we're certainly seeing countries like Poland with its KSEF mandate from next year, France, Spain, Belgium. These are the countries that are starting to, what I call that they're the catalyst countries. They're getting the attention of tax departments. They're getting the attention of wider IT and finance functions, and saying, look, this is now a theme. This is a trend. It's something that we need to meet, and we're ultimately going to have to meet this everywhere. So we can no longer rely on local teams making procurement decisions, local teams just getting a local solution. And they're starting to realize the benefits of, this is a single project, a single budget, maybe a single contract, and then the scalability in terms of, getting use of a single platform, training users. You're no longer reliant on just a couple of people in one country knowing how to use a system, and then if they leave, you lose that knowledge, and there's a big business risk. But there's obviously been some consolidation in the market too. There's been a lot of M&A, in terms of local entities being snapped up by some of the larger providers. But I think again, this is aligning with just the scale of these mandates, and that's only going to accelerate. It's only going to go one way. So I think this is expected now, but I think if we did the same survey in a year's time, or certainly in 2 years' time, we'd see these numbers change quite radically.
Yeah, it's a great point. I imagine they would start definitely following that trend with the speed you've been talking about. So the last point we want to talk about now is kind of the current systems people have in place. I'm going to launch another poll, and we'll see if we have the same technical issue or if people are still unable to respond. But we want to understand, how confident are you that your ERP can provide accurate data to support e-invoicing and tax data reporting requirements? Looks like this is working better now. So please take the option that best matches your situation. Are you very confident that your ERP or your current financial systems can provide up-to-date and accurate data to support the invoicing and tax data reporting requirements? So we've got about half of you voting. So I've been closing the poll in 3, 2, 1, and the results are coming up on your screen now. So this trends towards not being very confident. 10% of you said that you're very confident, 29% said confident, 48% said not very confident, and 13% were unsure. So I think, again, it's a bell curve, but I think that 48% said they're not very confident really does speak volumes. So what I'm going to do now is just compare that to how our survey responded, which is that that's the same question, and 16% said unsure, 30% said not very confident, 36% said confident, and then 18% said very confident. So in ours, it was again about kind of, you can split it about down the middle there, and on the right, about half the people said they were either unsure or not very confident, and slightly more than half on the left were either very confident or confident. So I guess, yeah, Alex, based on what people on the webinar said today and this chart, I mean, do these findings surprise you that such a large percentage are not very confident in their current system?
No, not at all. I mean, I think if you've looked at any finance transformation project or any tax technology projects, over the last decade or so, one of the key issues is always the quality of data. You know, that's always been a risk. People have different levels of cleanliness in terms of their data, and it may be fit for purpose today, but that doesn't necessarily mean that it's fit for purpose tomorrow under an e-invoicing mandate. There'll be very specific information that's needed. It's more granular. Some countries have very specific data elements that they need. Some rely on specialist lists, different codes, different catalogs of data that you may not have in your system today because you may not use it. Even when it comes to things like tax ID numbers, VAT numbers, that may be something that's, you may only have for like cross-border transactions, international customers. Maybe today there's a theoretical risk if you don't have that number. Under e-invoicing, in a lot of mandates, you don't have that number, the invoice will fail. That is in effect the unique address that sends the invoice through dynamic discovery to the customer. So as I said before, I really see invoicing as a data issue. It's the technology part's the bit that you're solving by going to a company like Avalara or another service provider. But the key, and I think most of the time in terms of a project, should be around the data. Reviewing what data do you have, in what format, where is it, how are you going to convert that or send that to the API of your service provider. We've taken an approach where we will ingest a single data standard, UBL 2.1, which is Universal Business Language, which is a global standard, and then we'll convert that to the local format, the local requirements, do a lot of conversion at the data level. But it's still very reliant on customers having complete and clean, consistent data. And you may have to make changes. You may need to make changes to some of the data tables. You may need to add additional fields. In France next year, they're adding 3 or 4 new mandatory invoice fields that aren't required today. You may need to get additional tax ID numbers from customers. You need both the SIRET and the SIRET number. So a lot of work that needs to be done, and even people who are quite confident, very confident, still do that testing. You need to do that exercise because what you don't want an invoice to continue to fail. We get asked this a lot at RFP stage. It's how do I correct an invoice? What happens if there's an error? That really should be a minimum occurrence. That shouldn't be business as usual. You need to fix the data upstream, and that starts now. Really reviewing that, improving it, augmenting it, cleaning it.
Absolutely. And one thing we did in the survey is we took this question here and we asked people, do you just have any other, comments to, kind of help bring this to life? And I'll put this on the screen here. I won't read through every single one, but you see, the major factor, the one word that stood out again was data, and people recognizing that their data needs cleaning. They don't feel the ERPs are totally up to the challenge, the low master data quality, that the master data is key, and the transaction data drives automation. So I think, again, if you're concerned about your current data and e-invoicing mandates and real-time reporting requirements, you are most certainly not alone. So before I turn to Alex to kind of talk us a bit more through, solutions and way forward, I want to just recap our findings here. So we found in our survey that e-invoicing mandates and compliance are getting more attention now, and they are tagged as a high priority in 63% of our survey respondents. Yet most global companies don't have global solutions in place to handle these compliance and new incoming requirements. 44% said that tax probably aren't included in the decision making for e-invoicing tools. And the concerns are mostly around business disruption, fines, and more audits. We found in our survey, and then similar in the webinar today, that over half, just in our survey, just over half were confident their ERP was providing them complete and accurate data to support the continuous transaction controls, yet poor quality system data was a major factor behind this uncertainty. So I know we've hinted at it kind of a lot today, but yeah, Alex, it'd be good if you could just give us a bit of a wrap up about why e-invoicing is such a core business issue now, and to help people kind of guide this conversation internally in their organizations as well.
Thanks, Sarah. So, first of all, this is the clear direction of travel for tax authorities. We've seen that already. The amount of governments, tax authorities that have launched mandates. From next year, over 50% of GDP within the EU will now be covered by an e-invoicing mandate. So success inspires, other governments. There was a report a couple of years ago from the OECD, and they described, a lot of, this kind of data reporting as a win-win option. Win-win for governments, increased revenue recovery, lower risk, less fraud, but also for businesses, the ability for them to ultimately save costs, improve data quality, and a lot of business process improvements. And when you look at countries like France, when they announced this, one of the big drivers for them, is, look, we're going to be in a position where we can pre-complete the VAT return. We're going to make VAT compliance easier for businesses. We've started to see this in Latin America already. If you go to Chile, the VAT return is prepared by the tax authority because they have the data already, through mandatory e-invoicing or e-reporting. So, every time a country implements this and it is heralded as a success, others take note. And I think, particularly VIDA, it's just opened the floodgates. It's making it easier for governments to introduce e-invoicing. Maybe we'll move towards greater harmonization. But I also think, through global e-invoice providers, we'll start seeing more synergies, being able to address, different complex mandates holistically, through a single solution, a single connection. What else? Well, straight off the bat, a PDF and paper are just no longer compliant. I think there's still a lot of misunderstanding, misconceptions around different stakeholders in the business, because a lot of people still see this as a parallel process. Okay, I send an invoice to the tax authority, I'm getting it cleared. Can't I still just share my normal invoice with my trading partners? Generally, no. The invoice you share is the e-invoice. There is only one tax invoice. While you may be able to create some sort of human readable version, a lot of countries are just very prescriptive in terms of what that can be and what it represents. So it's really a case now of looking at how you do business, how you interact with your trading partners, how you do procurement, how you do AP. Do you use a particular procurement network? Do you have customers or vendors that say you must use this portal if you're sending me an invoice? Because that all changes under e-invoicing mandates, or very particular models, the flows, how an invoice is issued and received, where it's obtained from. In Poland next year is actually the KSEF platform that creates the PDF. Suddenly in Poland next year, every single invoice in the country looks the same. And that's a big change to business as usual processes. It has a big impact on AP shared service centers, centers of excellence, particularly where you're dealing with more than one country. So, again, that's why it's such a core issue And if you get it wrong, there's going to have an impact on day-to-day business. And then finally, look, a new mandate can occur almost at any time. I'm in quite a privileged position that I get to speak with tax authorities on a daily basis. I am aware of a lot of new mandates that are coming up that we can't really announce yet, but they are coming, and they will often be at short notice, sometimes with 6 months notice, sometimes even less. And particularly for multinationals, some countries will say, look, we'll do a pilot first, but a pilot doesn't necessarily mean it's voluntary. The pilot may be, we're looking at the largest 100,000 businesses in the country, and multinationals are at the top of that list. So suddenly, you have to comply very, very quickly. So very important to look at this strategically, very important to do horizon planning, start tracking developments, speak to your advisor, join webinars, obviously like this, read blogs, but do try and build up your own roadmap so you can monitor it as well as alerting key stakeholders as soon as you can. It's so critical to get that buy-in early on. And for some of these countries, look, there will be professional services required. There may be data transformation. You may need additional resource for the project. So that all needs to be budgeted for. So, the earlier you can get this down on paper, you can do planning, you can get this approved, the better.
Absolutely. I mean, you raise really great points there, and I'm sure people on the webinar today are probably more likely the ones who kind of know this sense of urgency and maybe trying to bring it up the corporate agenda. So do you have any just tips you could share with people on the line about specifically around building this business case and getting that budget that you mentioned?
Yeah, absolutely. I think one of the key things to do is really just raise awareness, show leadership, C-suite, the scale of the problem. Really demonstrate this is no longer a local issue. If you can really demonstrate that the amount of countries that are bringing in e-invoicing, demonstrate it on a timeline. Really show that this is something that the business can't address locally. I'd also potentially highlight the cost of getting things wrong. We've looked at those implications already. The penalties, the impact of on business processes. Sometimes that really draws attention. If you can look at the kind of per invoice cost, maybe the amount of VAT that's at stake from an input tax recovery position, that's often good. But you can also use the opposite end of the spectrum. What is the carrot, not just the tax authority stick? And the carrot is business process improvement, finance transformation. A lot of the invoicing initiatives we're seeing around the globe don't even have a tax angle. If we look at Australia, New Zealand, Singapore, Japan, they're being introduced to improve business processes. There's a lot of research out there. When the French were launching e-invoicing, they talked about the cost of a traditional invoice issuing, posting, processing was about 10 euros, but the cost of an e-invoice was less than the postage stamp. Some very powerful statistics coming out of Australia from a report by Deloitte that I think up to 30 Australian dollars for traditional invoicing per document by the time you've taken into account AP costs, postage, sending, everything like that. Whereas an e-invoice is about a third of that. So, if you can get hold of some data, you can actually do some quite good modeling and start showing that business case, showing what's at stake. And actually, a lot of this may pay for a lot of that initial investment itself.
Yeah, thank you. I think it's really important to put this in the guidance, in the seeing as a holistic transformation as well. And do you have any pointers for people who are maybe still weighing up, keeping or managing their local solution versus moving to a more global solution? Could you help just talk through some of the pros and cons of those approaches?
Yeah, absolutely. So on the screen now, we've got a kind of good comparison. A lot of local solutions, okay, smaller companies, really built just to meet a single problem. So they may be very good for a local market, but by definition they're not scalable. They don't have the size, the scale, the support, the infrastructure. The data ingest, will be very specific to the local country. So when you're starting to look at e-invoicing in more than 2 or 3 countries, I think you then lose the ability to use local solutions. Too many different contracts, too many vendors, too many bits of IT infrastructure and kit to manage. Particularly in terms of any upgrades, changes, testing, process documentation, it becomes very unruly. And as you start scaling, the amount of invoices, maybe you lose economies of scale because you're spreading that across different vendors. So particularly when it comes to renewal, there are a lot of additional costs there, not just monetary, but time cost too. But if you compare that with, a more holistic strategic approach, take a central approach, have a single solution, a single provider. From a procurement perspective, from a contractual legal perspective, from a billing perspective, lots of streamlining there. But from a technology and integration perspective, we're looking at single integrations, like a single API, the ability to connect once, and really leverage work done on previous connections and implementations. So because we're only talking about one solution and one integration, that should be easier to maintain, lower costs, lower efforts. And then look, the economies of scale. For example, Avalara, we price country agnostic. It's based on volume. So the more countries you add, the greater volume of invoices, the greater economies of scale you see. So I think we're at this critical tipping point here where, okay, multiple solutions were fine in the past. They were fit for purpose, but very quickly with the amount of new mandates coming online over the next 12 to 18 months and beyond, it's no longer sustainable.
Absolutely. So I think you've given really good guidance there on both the landscape, how it's changing, and how to move forward now. So could you just give us some more information? I mean, first of all, about Avalara, and how you're helping companies around the world?
Yeah, absolutely. So very quickly, if you don't know Avalara already, we are a global tax technology company. We've been disrupting the status quo of global tax management since 2004 when we were founded. In the US, we're headquartered out of Seattle, but today very much a global company. We have over 22 offices across the globe. For EMEA, we're headquartered in Brighton in the UK, but we've got offices across France, Spain, Italy, Belgium, Luxembourg, Romania, Turkey. I know I'm missing lots of countries off there. We've got a lot of presence in India, Brazil, and across the US too. So very much a global company. We help our customers achieve compliance, reduce their risk, and streamline their business processes. We offer end-to-end global compliance, so providing solutions across the indirect tax lifecycle. We're building our solutions for scalability. So rather than focus on local country solutions, it's really building a solution that then has global content, global workflows. So a single connection, a single API, and really built on our strength and depth of our partner relationships. So we're very unique that we have over 1,200 signed partner integrations, across our compliance suite, which means it's easy to connect, to implement, to integrate our solutions, with your ERPs, your bidding platforms, procurement systems, marketplaces, really kind of turning the traditional implementation model on its head. Less professional services heavy, really built on pre-built integrations, so much easier to integrate. We also have big regulatory research teams, a content team, over 100 people who constantly look for rate changes, rule changes, changes in VAT returns, e-invoicing mandates, requirements, schemas, code lists, we're on top of it. And then, we have a lot of subject matter experts who are involved at a policy level, working with governments, the European Commission, other influencer bodies. We're a member of a number of different working groups, within tax and e-invoicing around the globe. So, getting involved in those very early discussions with tax authorities, participating in the design and rollout of a lot of these mandates. And very quickly on the screen, just a summary of our kind of product suite, end-to-end across the life cycle, starting off with support for registrations, VAT, GST, sales tax, PEPL if you need a PEPL ID number. We are a certified PEPL provider across Europe, Australia, New Zealand, Japan, and soon to be in Singapore. We can provide support with classification, classifying goods for customs duty, import VAT. We're probably best known for our calculation service, Avatax, which is a global tax engine. And in the last couple of years, in a single year, we received close to 40 billion calls to our API. So people relying on us to get the right tax calculation at the point of sale. Particularly important in the US, over 10,000 different tax jurisdictions there. So, really everyone in the US needs a tax engine, and, a large percentage will use Avalara. Of course, e-invoicing, we are now a leading e-invoice provider. We acquired Imposia in Germany over 2 years ago and have now integrated that, rebuilt and launched our next generation global e-invoicing solution. So supporting B2B, B2G, B2C, various different models, real-time reporting, QR code generation, PDF creation, as I said before, access the PEPL network, digital signatures, and built on a single API. And then at the end of the process and the life cycle, the reporting and the returns as well. So we have a SaaS-based VAT returns reporting solution, and Avalara's software helped file more than 4.1 million returns in 2021. So, definitely a lot of experience and expertise there. And we'll start to see, more synergies and connections between e-invoicing and returns as e-invoicing matures. And then, finally wanted to, just spend a couple of minutes talking about our e-invoicing solution. So Avalara e-invoicing and live reporting is a single global e-invoicing platform built on a single ingest, a single API, which is built on Universal Business Language, UBL 2.1. So a company, a business would send us a single UBL invoice or credit note, and then using our engine, we will convert that to the relevant format, regardless of the country. We will meet those local standards. We will add the relevant QR code, digital signature. We will carry out local checks. We will then send that on the right workflow, on the right network, to the right government platform, bringing back messages, status updates that can be viewed within a single monitor screen across the globe. You can filter by company, by country, other various data attributes within the invoice. We provide compliant archiving. We have dashboards, so you can provide updates on and analytics on the invoices issued and received. And because it's an API, you can also retrieve the invoices back. So back into the ERP, billing platform, procurement system, and then back into business as usual. Some people use us as an engine in the background. We're not really a user interface. We're just creating the relevant invoice. We're sending it to the right place. We're retrieving the invoice or messages back. And then you use your ERP for business as usual. Others will use our monitor, the way to look at invoices, download, view, review. But this is a single platform, a single solution. It's not lots of different acquisitions bolted together. We built this for scalability.
Thank you, and thank you for kind of bringing the solution to life right there as well. So we do have a few questions from our audience, which I will put to you, and again, we will finish kind of promptly on the hour. And if you haven't asked your question yet, you can do so using the question box. So one question for a listener we have is, how will this affect like a small UK company that invoices large European companies? Will foreign companies have to comply with the different EU invoicing mandates?
It's a good question. So, first of all, because I said the UK doesn't have plans at the moment to introduce e-invoicing, probably a lot behind the kind of European neighbours. There is a mandate at the moment in the UK for the NHS England, if you're invoicing, but no clear plans for the UK. Generally, e-invoicing mandates themselves only apply domestically. So traditionally, in-country businesses, you have an establishment in that country, but there are exceptions. Particularly business to government. A lot of those business to government mandates will equally apply to a non-resident company. So you may want to use the PEPL network to share an invoice with them. We often see e-reporting, live reporting requirements equally apply to a non-resident company. So Hungarian live reporting of invoice data. In France next year, e-reporting will likely impact a lot of UK non-resident companies with a local French VAT number. And even in Spain, we're everyone was gearing up for a mandate in July. There's been delays in the legislative process, delays in the technical guidance, following a consultation and in the run-up to the elections. Now we've now seen new draft legislation with some new requirements and possibly a new timeline as well. And some people interpreting that Spain may move to implementing for non-residents as well. So very much watch the space. But that shows why it's so important to, really horizon plan, look at the impact, because the headline may be, this is for local resident businesses, but some of the live reporting, mandates may equally apply to a non-resident.
Thank you so much. Another question we have from a listener. Alex, are more companies looking for the same solution provider on both the sales and purchase invoice side, do you find?
It varies. I think some businesses have solutions in place already for AP, procurement, spend visibility, for example. So there may be a temptation to kind of keep that. For some countries, it's possible that you may need a single provider, just because the tax authority under a centralized model will provide access to the invoice, and maybe you can only have one kind of service provider agent on record. But I would say it's not mutually exclusive. You can continue to use some procurement platforms, networks, while still having a different e-invoice provider. It's all about interoperability, and particularly it's about APIs too, because an API should be system agnostic. Any system, whether it's a billing platform, a procurement platform, a homegrown system, should be able to call an API. So if you're using a procurement system for spend visibility, for maybe management of AP vendors, invoices, PO reconciliation, approvals, things like that, you can still bring the invoices in through another service provider into the channel, into your business as usual today. But what I would say is, you may need to revisit your use of certain platforms, networks going forward, just because are they compliant with a mandate? Is the way you receive an invoice, how you interact with a vendor, is that still compliant? Can you still use your current process, or will you have to adapt that based on the new mandate?
Thank you. Thanks for that great answer there. Another question, in light of also the number of people not very confident in their ERP system, are ERPs ever really enough to ensure compliance, or are having additional compliance solutions really necessary in this day and age?
It's a very good question. I I think it really varies, based on the complexity of the business, the use cases, the complexity of the mandate, and sometimes the notice period for the mandate, because you could say that invoicing is a very core function of an ERP. Some ERPs, are embedding e-invoicing services within their main service. So they will, be white labeling. They will be developing their own e-invoicing solutions. But others will rely on partnerships. Others may have kind of app stores, kind of in-app purchases, so you can activate a third-party provider. Others may be working on connectors. We're working with a number of major ERPs, on various different models where we will power e-invoicing for them, or make it very easy for their customers to connect to us. What I would say is, don't just assume that the problem will be solved through the ERP by the ERP. The problem is complex. The requirements, there are hundreds of them that vary country by country, and even though there may be very core strategic markets that ERP that they want to support and they will support, they may find the pace and quantum of mandates too difficult to solve on their own. So absolutely, do ask your ERP what their roadmap is. Do assess it as part of your vendor selection, your procurement strategy, but don't just rely on the fact that it will be implemented and on time, and that it will meet every single use case that you may have, particularly as a multinational.
Well, thank you so much. So I think now we are nearing the hour. So I just want to take a moment to thank Alex again for a tremendous presentation. I always learn so much when I talk to you. So I've really enjoyed working with you on this, and actually, and everyone in the whole team at Avalara has been really lovely. So if you do reach out to them, they are a really fantastic team and a nice company to work with. So just thank you, and thank you everyone on the line today. Thank you for asking really thoughtful questions. Thank you for participating in the polls. I know we can't see you, but it is nice to see you voting and asking questions and staying on to the very end. So we do really appreciate every one of you who participated in the survey, everybody who's turned up to today. So to you all and the team at Avalara, just a really big thank you so much. We've got a few other webinars coming up, either this side of the summer or after. So we hope to see you at those. But really, again, thanks again for your time today, and we look forward to welcoming you next time. Thank you and goodbye.
Thanks, Sarah. Thanks, everyone. Goodbye.
Bye.